This stupid easy trading strategy consistently gives me days like this, and this, and I'm about to show you exactly how. It is so simple that even a complete beginner couldn't mess it up, and the best part is, it shows up every single day. So let's just get straight into it. All these results are very easy to achieve, and I'm no better than any of you watching this. If you watch this video and follow 3 simple steps, you will be able to achieve these results in less than 1 hour of trading a day. I will show you how to enter the market, place the stop loss, and exactly what to target. Which means no guessing or hesitation, just simple and repeatable process. And I'm not just saying this for fun, I will also show you a lot of different examples on real chart. We will trade this from 9:30 am till 10:30 am, which means only 1 hour of work. And the best part is it works on forex, indices, and all markets in general. So let's break down the strategy in 3 simple steps. Step number 1, mark out key liquidity zones, ones that are obvious and easy to spot. And we are going to do this on 15-minute time frame and 1 hour time frame. It's all up to personal preference, but let me show you what that looks like on the actual chart. So we can see here that we are making quite structure to the upside, to the downside, and again to the upside. And what do we need to do on this chart? We need to basically spot some obvious highs and lows. And let's say, for example, what are highs and lows obvious on the chart right now? This high is pretty obvious and this low is pretty obvious. So what are we gonna do? We are just going to mark them out, and that's it. And we do that with this tool, which is basic line, and that's it. So just like this. Step number 2, after sweeping one side, we need to see a imbalance getting created, and we are going to do this on 1 minute time frame, 2 minute time frame, and 3 minute time frame. I'm going to show you exactly how to know which time frame to use, and in this example I'm going to just use the 1 minute time frame, so it's easier for you to understand the basics. Then we are going to, of course, get into a little bit more advanced stuff. So let's just head and go to the 1 minute time frame, and we are just waiting for a sweep of one side. So looks like we are going to the upside right now, and there it is, we swept the upside right now. So the next step we are going to do is we are looking for the imbalance, and what the imbalance is in the market I'm going to show you. Let's say on this example right here, as you can see, we have one candle right here. The colors are not important, but we have one candle. So this candle right here, we have this candle right here, and this candle right here. So we have in total of 3 candles. So a minimum of candles for us to get a imbalance is 3 candles. And you might heard of it as a term fair value gap. And basically what we are looking for is the top wick of the first candle and the bottom wick of the third candle should not cross over each other. So this right here is a valid imbalance in the market, and if the wicks cross over each other like this, we do not have a valid imbalance because there is no imbalanced space in between those candles. So basically we want to look for some last imbalance after the sweep. So we want to see some imbalance getting created while sweeping the liquidity, and we can see a imbalance right here. So what we want to do is we want to mark it, and basically in the last step we are just going to enter the market. And let's go to the last step. Step number 3 is wait for the imbalance to get disrespected and enter the trade. A stop loss below the body or above, and target opposite liquidity. So let me show you what that looks like right here. So we have this imbalance right here, and what we want to see is a close below the imbalance. So close below here for us to enter the trade. So let's see if that happens right here. And as you can see, that did not happen right now, but what did happen is we created a new imbalance. So we just switch from the first imbalance to a new imbalance, and we just wait for the close. So we actually want market to close the candle below this imbalance, because that means market wants to basically change directions. So we are just waiting for the close, and let's see what happens. As you can see, we created new imbalance, so we just mark out the new imbalance right here, and we just wait for the disrespect, and there we get it, and there it is, we got the imbalance right here. We can put the stop loss either like this on the body, or we can put it on the wick of this candle like this. It's all up to you, it's all personal preference. And we said to target some kind of opposite liquidity to the downside. And what do I like to do? I like to kind of see some nice obvious looking liquidity on the chart. So we can either target this liquidity because I like to scout this target liquidity on the lower time frame. I don't want to target huge moves that will just take a lot of time and sometimes they will not work out. So I can either target this liquidity right here or this low right here, which is pretty nice and obvious. So what I can do, I can target, let's say, this liquidity, but I just want to show you basically what you can target in the live market. So this is 5.1 risk to reward, which is actually pretty huge. And I just see, is it going to play out or not? And looks like it did play out. So there it is, just a beautiful example of what a perfect setup is of this strategy. Before I show you some examples, if you want to skip the learning phase and get straight into making profits with me, there will be some links down there, also a lot of free documents that I will show you later in the video. So let's just go to another example. Here we have another example in front of me, and in this example something interesting is gonna happen. So basically we are not going to execute from the 1 minute, but I'm gonna show you how you can execute both from the 2 minute and the 3 minute time frames. So we of course start with step number 1, and that is always going to be mark out key liquidity. So we have this liquidity on the higher time frame and this liquidity on the higher time frame, which are pretty obvious. You cannot really miss them with a bare eye. So all we do right now is we mark those liquidities like this with a line, and after we do that we can go to the lower time frame. And I always prefer to go to 1 minute to wait for the sweep, so we are gonna do that. So let's see where the market is gonna go. So market is heading to the downside, and there it is, there it goes, the sweep. So I always told you in the first example that right now you mark out the imbalance on the 1 minute, but what you always have to do is when you mark out, let's say, imbalance on the 1 minute, so this is imbalance, we want to go through all the time frames to see if there is any imbalances on the other time frames. So from the 1, 2 and 3 minute time frame, you are always going to choose the biggest time frame that the imbalance is on. So we have the imbalance also on the 2 minute, you can see it, and then we go to the 3 minute time frame, and here we also have the imbalance. So we are always going to choose the biggest time frame to actually execute on. So if we have imbalance on every single time frame, we are going to use the biggest for the entry. So we had the sweep, right now we are just waiting to see if we get the entry, and right now we reacted off of it, and looks like we are headed to the downside. And same thing goes again, we just mark out a new imbalance, and this is it. And also this is on the 3 minute time frame, you can see. So we are always going to choose the biggest time frame. We can also see that there is imbalances on the 1 minute, but we are always going to use the biggest one there is, and there is imbalance on the 3 minute. So we are just waiting for the entry. Let's see, does entry happen? We are still waiting, and there it is, this is the entry. So we enter the position right here, we put the stop loss below the body, how we learned, and we target some nice looking liquidity. So for example, this liquidity is just way too close, and that will be not that good to target because that will be literally negative risk to reward. So we want to target some nice looking liquidity like this one right here. So let's just see how is that going to play out. So I'm going to zoom this out a bit more, and let's just see, is that going to play out to the full TP? Still there, and there it is. So you can see 3.3 risk to reward, and trust me guys, once you master this strategy in the live markets, it works 80% of the time. And I literally don't lie, like I do this every single day. I also stream to everybody for free, and I just prove it to everybody every single day. So in the next example, I'm going to show you a different kind of entry that is also basically the same entry, but a different kind of looking. So I'm going to show you that right now. So here we have another great example. Market open just happened, and basically we always start with step number 1. It's always going to be back to basics. It's just going to be marking out highs and lows in the market, and we always want to look for some obvious highs and lows. We don't want to mark out some kind of, let's say, this low right here that just happened, or I don't know, this low right here. Like those are not obvious. You always want to look for some obvious liquidity that is sticking out like this. We don't want to mark out all of these little lows like this, they're just gonna confuse us in the long run. So always go for the obvious liquidity, and we are going to mark out liquidity right now. And of course we do this step on the higher time frame, on the 15-minute or the 1 hour time frame. It's all up to your personal preference. You can always like mix them and try what works best for you. So once we have marked out the basically liquidity, we can go down and go to, let's say, 1 minute, because that is best time frame to basically wait for the entry and for the sweep. We are just going to do that always. So after the step number 1, we just wait for sweep of some kind of liquidity. So as you can see, we are still waiting, and sweep just happened right here. So what right now are we gonna do? Of course we have imbalance right here on the 1 minute. We set it and you can see that, but that is not enough for us. We need to always scout out different time frames to see if there is any more imbalances. And as you can see on the 2-minute chart, we also have imbalance. So of course what we do, we also check the 3-minute. We always have to remember to check every single time frame. And you can see that on the 3-minute we do have this imbalance right here. So we are of course going to wait for the biggest time frame to close the imbalance. And let's see, does that happen? So it didn't happen right here, but it did happen right here. But there is a little trick in this trade, and you can see that we did close this imbalance, but there is another imbalance right above, and we cannot enter the trade if both of these imbalances do not get closed above. So what are we gonna do? We are going to wait for the second one to get closed above, and that's when our entry is completely valid, because there is no reason for us to go to the downside when we disrespected all of the basically fair value gaps and imbalances. So what do? We enter the trade on the close above the second imbalance. We put the stop loss. In this instance, in this like scenario, I like to put it below the actual wick, because body is also inside this fair value gap, so I like to put it below the wick. So I always want to have it below the fair value gap that was just closed. And what do? We target some high, some obvious high. This is pretty obvious high. You never want to target some huge risk to rewards, because this risk to reward compared with a huge win rate is always going to be better off than huge win rates. And as you can see, straight to the take profit, and you can see how quickly, literally this is 5 minutes and you call it a day. 5 minutes and literally you are done with your working day, and you can do whatever you want. So basically I'm going to show you one more example, and trust me, in this example we are going to have something that is probably gonna make you profits in the live market. Like, there's a lot of these little things that you always have to worry about that is basically going to make you profitable. So let's go to the last example. Okay, so in front of us we have very interesting example, and of course we are always going to start with the same thing, and right here we are just going to start with marking out obvious sweeps of liquidity. So this is a obvious liquidity, as you can see, and to the downside, this right here, I would call it pretty obvious liquidity, because it's quite a low, you can see like this, and I just want to have that liquidity swept before entering or trade. So next thing we do is, of course, we always go to the lower time frame and we wait for some kind of sweep of some liquidity, but in this case I forgot to mark out those liquidities, so we are of course going to do that. So let's do that, and right now we go to the lower time frame and we wait for some kind of liquidity. So looks like we are going to the downside, and we got the sweep to the downside. So of course we always do the same thing. We have the fair value gap on the 1 minute, but we have to check out all the time frames. So we go to the 2 minute, and you can see that we also have a fair value gap right here on the 2 minute time frame, but we go on the 3 minute also, and as you can see, we do actually have here another fair value gap. So we want to mark out this fair value gap, and we just wait for the sweep of this fair value gap, of course. And let's just wait and see, and exactly perfect sweep of this fair value gap. And why do I enter this trade if we have another imbalance right here? Because we actually did not tap into this. So you can see that the top of this candle's wick actually did not tap into this fair value gap, and that is why we are totally valid to enter this trade. And of course we can target easily something to the upside, let's say this liquidity right here, or maybe this all the way liquidity to up there, but that is way too risky for us to target, because we want to be quick in and out of the market and catch our profits and just be happy with them. So let's see if this actually works or not, and you can see it worked perfectly, and it also took all the way this liquidity, the highest liquidity, there was almost 7 risk to reward, but we actually took profits on the 5.2 risk to reward, which means if you, let's say, have $100,000 in funding and you risk 1%, you would have made $5.2 thousand on this single trade. And it literally lasted for how long? It lasted for literally 39 minutes. So imagine making over $5,000 in 40 minutes. Like, boys, that is literally insane. So if you made it till this part of the video, you're actually bound to succeed because you have the will and now you have the knowledge to actually succeed in trading and get profitable. So the last thing I'm gonna do for you is I'm gonna give you a complete free playbook. Just because you made it till the end of the video, you can go down there in the description and basically claim my free 10-page playbook that is basically my whole strategy in a PDF document. And also, if you like the video, you can throw a like, you can comment something nice, also you can ask something in the comments, I will answer anything, and also throw a subscribe so you never miss my newest content. And basically with that out of the way, boys, I'm gonna see you in the next video. Peace.